All right, all right, all right. Hello, ladies and gentlemen. This is Dr. Greg McLeod from Elite Traders University, and welcome to Coffee Hour with Greg. And I've got my cappuccino right here, and you can join me for our Forex forecasts. Here we're going to broadcasting live on school, and I hope you guys are doing great on this fabulous Thursday, this 14th of May, 2026. And here I'm going to dissect the markets for you, give you some insights about what's going on. The key to the trading market is having the right intel, having the right information. And if you don't have the right information, if you don't have the right intel, you're going to be off balance, and you're going to be taken advantage of. And the market's going to eat your lunch if you don't know what's going on. So I'm here to break down the complicated things in the market so you can understand. And the fundamentals are the biggest part of the market. You can look at squiggly lines and trend line breaks and ICT and all that other stuff. But if you don't understand what the big boys in Wall Street, I used to work for a Wall Street firm, and I'm a 30-year trading veteran. I work for one of the largest Forex broker dealers in the world. And we look at what's driving the markets, and what's driving it are the forces, the global news, the global political structure. So we're going to start with that. We're going to do a breakdown. We're going to look at the economic calendar. We're going to look at what's going on with that, what's going on in the world, what's going on with Donald Trump, what's going on with the United States and the economic picture, the war in Iran. How does that impact the trades, which gives us the upper hand when we're trading the markets? Because basically what we're doing is trading the news, okay? So let's go ahead. I know it's kind of scary trading the news. Avoid the news. Like, you can't avoid the news. The news is everywhere, guys. Let me tell you that. All right. And let me go ahead and I'm gonna go ahead and record this. These are Bulls versus Bears weekly Forex forecast for 5. This is the 14th, 2026. Okay, and so I'm gonna start the recording. And let me go ahead and share my screen to make sure you see our risk disclaimers and some things like that, right? So Bulls versus Bears. Again, so happy to be here with you guys for our strategic market forecast. And I'm going to share my screen. And okay, view, reading view, and share screen. And I tell you what, I love my purple mattress. I got one of those, and I sleep so well. This is not a paid endorsement. They should endorse me because I feel like $1,000,000. Okay. Elite Traders University is a company I started to help people trade professionally in 90 days or less using my proprietary system and proprietary algorithms. We're able to help traders become professional in 90 days or less. And if you want to know more about that, you can always reach out to me in the chat. Okay. And I'll make sure the chat is open that you can hear me. And on the YouTube, a big greeting out to YouTube. My YouTube channel has been down for a while, and we're just now beginning back. So happy to be back on YouTube. And thank you for watching, all my fans out there on YouTube. God bless you guys. Welcome back. Also, my school community, thank you so much. I got my school community people. Big shout out to Mia and Eugene and John Appleton. And also a big shout out to Rodney Miner, all the and Jeff, of course, Jeff, and John. John's usually online too. Okay, Elite Traders University. There we go. Our Bulls versus Bears. How you like that? Strategic global forecast. The outlook there. Thought I did a great job doing my cover slide there. Let me direct your attention to the risk disclosure on your screen to make sure you understand all of this associated foreign exchange trading. And I'm not crying tears of joy. No, I'm not crying tears of joy. Allergies, change of weather conditions, can impact my eyes. Anyway, moving right along. All right, I've been doing this let me change the picture there. There's a slimmer, younger me. So I've been doing this for a long time, guys, over 30 years, and never worked a day in my life because I enjoy what I do. And I trade stocks, options, futures, and crypto. I worked in one of the largest forex broker dealers in the world, and I'm a published author and former school teacher, and won a lot of awards. And so just so happy to be able to be of service to you. My mission that God gave me was to help people to become financially independent, unplugged from this system, from this world system, which keeps you on the hamster wheel, which keeps you enslaved. So I feel like I'm a modern day Martin Luther King or Harriet Tubman, helping the slaves, helping the workers get free, not from overthrowing something and protesting the street. That doesn't work, guys. That was 1960s. Put the signs away, get in front of a computer, and start trading. You want to get free, trade. Okay, I'm thinking I'm gonna copyright that. If you want to get free, trade. Let me write that down. Right. Put your signs down, put your protests down, put your horns down, your whistles down, sit in front of the computer and trade. Because you can trade, you can make gold. And he who has the gold makes the rules. You have no gold, you can't, if you don't like the rules, you gotta have gold. The people who are changing the rules have gold, right? They have gold, they have money, right? And they influence things. You have no influence because you have no gold. And you're frustrated and you're depressed and you're sad and you're angry and you're miserable and you're sitting around on your phone. You're not making any gold, right? Make gold, change rules, right? When I was a teacher, I was helping the kids. The administration was in my way. And because I didn't make as much as the administrators, I didn't make much as the district people, I could not help the kids the way I wanted to. So what I had to do, I had to quit and become a trader, and then I can help kids the way I want to help kids. I can have tutorial programs. I can teach them the markets. I can do things. Why? Because I have gold. I didn't sit around and complain and beg people, oh, the government gotta help me out. Don't be a snowflake, bro. Trade, get free, make decisions for yourself because you have cash, right? You make a withdrawal from a broker, got cash in your bank, do what you want, right? Start an after school program, start a homeless program, stop relying on the government, get free, learn how to trade. Okay. I'm going to get off my soapbox there, but tell me what you think in the chat box, right? Tell me what you think in the chat box. Just tell me positive or negative. Greg, you're full of shit, or Greg, hey man, you right on, right on, brother. I'm like from the 70s, bro. Right on, right? No justice, no peace. Don't burn stuff down. Get your laptop, get your phone, make some money, change some rules. Give to your political person that you want, that you like, that says what you want to have happen, and pay them. Give them a donation. They'll listen to you, right? But you have no gold, so they're not going to listen to you. It's not fair. It's Monopoly, guy. You ever play Monopoly? You got to have that money. The moment you run out of money in Monopoly, you can't play anymore. This is a game. And I'm giving you the way for you to get the gold fast, right? Not working a 9-to-5 job, but 2 hours a day. You make some gold, and now you can change rules, right? You can get your family free. You can get yourself free. Okay. Enough of that, right? All right. And speaking of gold, yeah, I know it was a shameless plug for my book, The Gold Rush Blueprint. I wrote a book on how to trade gold. I predicted gold was going to hit 5,000. I wrote about it. I plotted it. I told people about it. And I had a lot of students that basically held a position and made a ton of money on it. The book is still available. It's $19.99. If you don't see it, or if the link doesn't work, go ahead and email me at greg@elitetradersu.com, and you can purchase a copy. Okay. Our agenda for today, we're going to look at the dollar index, the euro, the Aussie dollar. We're going to look at the majors. The majors are about 85% of the market, right? And we got into the I love pound yen. Pound yen is one of my favorite currencies. Going long, it just moves. But the Bank of Japan right now is intervening in that currency, and it makes it very, very dangerous to trade. And I knew it, and it was going up, and I went in, and I knew better, and I lost. Right? Bank of Japan is throwing $35 billion when those long spikes on the chart, 35 billion, right? So if you're just a technical trader, we have great technical tools, right? One of our students looked at technical tools. Pound yen is a buy. Our AI said it was like 100, like 99% confidence rating, right, on pound yen. It was great. It was a great trade, and we're making money on that trade, right? However, I had mentioned earlier, and someone said, Greg, you mentioned earlier, and I said, very what I just said, right? But I said, the Bank of Japan is in there, and they are buying the yen, which forces pound yen down, Aussie yen, dollar yen, Swiss yen will drop when the Bank of Japan, they want to make their currency, used to be they want to make their currency weak so they could actually sell more Sony PlayStations and Lexuses. The lower their currency is, the weaker their currency is, the more stuff they sell. Okay. Now they didn't invent that system. The United States gave them that system, right? In order to keep them from becoming communists, we felt bad after dropping 2 atomic bombs on them in 1945. So we created a monetary system for them that gave them export advantages by having a weaker currency, right? Now the other Asian countries like Malaysia and China and Thailand and Korea, South Korea particularly, are now doing the same thing. They weaken their currency in order to sell more stuff. That works really, really well up to a point, because it means that you can't buy as much stuff, right? Like we used to go to Mexico back in the 1980s, go down to Tijuana. You take $1, you could buy a case of cigarettes and you can buy a steak. You used to get steak and lobster for like $3 or $4, right? So a bottle of beer was like 20 cents. And because why? The peso was low and the dollar could buy a whole lot, right? So the peso was weak, we could buy more stuff, right? More trinkets and hats and beads and stuff like that when we came back, right? However, if you're a Mexican coming to the United States with pesos, you can't buy a whole lot of those pesos, right? It may cost thousands of pesos to buy a hamburger or a bottle of beer or something, or gas, right? And so it's happening to Japan, where you have a weak currency and oil is at yearly highs, right? $100 barrel oil, and your currency is the yen, and it's super weak on purpose because you weakened it because you wanted to export more. But now you can't. Your energy costs are expensive. So what do you got to do? You have to do the reverse. You, instead of weakening your currency to sell more stuff, you have to strengthen your currency in order to buy stuff, right? Without having to, so you need fewer yen to buy oil if your yen is worth more. So how do they make their yen worth more? Well, they go in there and they buy yen. Why? Supply and demand. The less yen that's out there, the stronger it gets, right? That's why gold is expensive and dirt is cheap. There's a lot of dirt. You hear the term dirt cheap? Why? Because there's a lot of dirt. Gold, there's not much gold, and so gold is highly valued. So it's scarcity. If there's a lot of something, it's very cheap. If there's not a lot of anything, then it's very expensive. So with all this yen floating around, they decide to buy their yen back. And when they buy the yen back, it makes the yen stronger. And if the yen is stronger, then they can go buy oil, and it's not going to be as expensive because they have basically strengthened their currency to buy more stuff. They can buy more yen. I mean, they can buy more oil, they can buy more food or whatever they import, raw materials they need. They can buy those things on the open market with a stronger currency. Now, on the flip side of that, it makes all of there's Sony PlayStations and Lexuses and things they export, it makes them more expensive, which means that they sell less. So it's going to impact their companies and corporations in the short term, right? In order to get the fuel they need for their economy. So it's kind of like they're backed into a corner, right? And so having a weak currency is great if you're an exporter. If you're selling stuff, you want the lowest currency in the world. That's why people say, well, the dollar is falling. Donald Trump is hurting the reputation of the dollar. The dollar is falling. That's the point. You sell more stuff when you have a weaker dollar. You sell more John Deere tractors. You sell more Marlboro cigarettes. You sell more American cars when the dollar is weak, right? We don't want to have a weak currency. You don't advertise, hey, weak currency, because the dollar is the reserve currency of the world. And many people many countries hold on to dollars, right? So it's a kind of thing like the dollar will fall by market conditions, but we don't desire a weak dollar, right? So we're talking about both sides of our neck. We want the reputation of having a strong dollar because reputational wise, other countries don't want to be in a currency that's falling, right? But on the other hand, from an economic point of view, from the United States point of view, we want to have, from a manufacturer exporter, we want a weaker dollar, right? It's just like if you travel overseas and you're going to Europe and France and buying Versace, whatever, you want a strong dollar so you can buy more stuff. Like I went to Mexico in the 80s. I want a strong dollar because I want to buy steak and lobster, right? Cheap, right? Now I live in Vegas and I get steak and lobster cheap anyway, right? So so stronger currency is great if you travel. If you are domestic living here, having a weak dollar is good if you work for a company that exports stuff, right? If you buy a lot of import stuff, well, our dollar is still stronger than a lot of other currencies. So the stuff that we buy, that most of our stuff, a lot of our things are imported. That's why it's very important to bring back the industrial base, bring back the manufacturing to the United States. That way, we don't have to worry about having a strong or weak currency to buy stuff because they make the stuff here, right? And that's the whole idea of the tariffs, is to make people make stuff here, just like we make stuff over there because of their labor costs and things are cheaper. Well, we're creating incentives to create that there, which makes the dollar weaker, which gives us the thing that we trade, the dollar. We trade the US dollar. 85% of the stuff we trade is the US dollar. Okay, so I gave you a little bit of a tangent there. I'll give you a little bit of background of these different things, especially, we're talking about the war, what's going on in Iran. Well, guess what? The more that we're fighting, the dollar will get stronger because people run to the dollar for safety. However, if we have a peace, we're going to see the dollar drop, we're going to see oil drop, and we're going to see other currencies rise as well. The Aussie and Kiwi are going to rise. And so why notice how Donald Trump went to China and he had all of these top heads of the biggest companies in the United States, in the world, went to China with him. Well, you guess what? They are in rooms talking about the end of the war, right? Pete Hegseth went with them, and Pete Hegseth is going to tell the Chinese what we're doing in Iran, and everyone's going to be there listening to this. So they're already going to know how this war is going to end, and they're going to position their money ahead of this. much like the Rothschilds did during the Napoleonic Wars. They got information. It's like Gordon Gekko said in Wall Street, the most important, the most valuable commodity I know, buddy, is information. Wouldn't you agree? Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. Okay. So the battle was already fought, about Iran years ago, right? I remember reading a book about that found in the UCLA library back in the 80s. This was before Operation Desert Storm and all that stuff. They said the next war is going to be in the Middle East, and the next war is going to be over oil, because the khaki uniforms and the helmets and the khaki tanks and all that stuff has to be made years before a war. You can't say, I'm going to declare war in the Middle East, and we've been wearing green fatigues for Vietnam for years, right? The Army is green fatigue. Now, normalization for like the uniforms you see, maybe you see a service person walking around, they're tan fatigues. I tell you what, when I was a kid in the 70s, when you see a military person, they wore green fatigues. And that's very important because camouflage tells you the environment that you're going to fight in. And if they're wearing green fatigues, it means that they're going to fight a jungle war, right? Now you're seeing them wearing tan fatigues. It's a desert war. So, well, Greg, that seems obvious enough. But you have hundreds of thousands of people that need uniforms. You have equipment, tanks, guns, all kinds of amphibious craft, all kinds of equipment that has to be that color. You don't do that overnight. It takes years of preparation and planning to go from green to tan. So they already had it planned what they were going to do and how they're going to do it, and everything is already like pre-planned, right? And so also the end of the war is already pre-planned. And there's going to be a huge transference of wealth when that's announced. But even before it's announced, you'll see that happen in the market, right? And so that's what we're a very critical point here that I'm so glad you're on this broadcast. So let's just get to it. I just wanted to explain to you that the economic, the geopolitical situation on this planet right now is a very critical point for traders. And it's not a lot of hype. This is not a hypey thing here. It's just something that I want you to drill in your heads, that you need to watch the news, not because of all the killing and stuff like that, but watch the stuff that's you can make money on. Think about the monetary. Think about how can I make money on this, right? Because that's what everyone else is doing, right? All right. We did that. Let's go ahead and let's go. Oh, that's right. Let's go ahead to my market heat map. The arrangement of currency pairs by percentage change. We'll see what's hopping, what's popping, what's dropping, and what's not. It's my favorite tool for trading the markets. You can get access to it for $19.99, or you can go for free. Just access one of 6 powerful heat maps. And we can see that the US dollar is up. This is the dollar index. This is the Dow Jones FXCM US dollar index. Dollar yen is up as well. But look, but it's moving. It just moved just now, right? The high was 158.19, and we're at 58.18. 58.19, and the low is 57.75. So we came a long way, baby, right? US dollar is doing its thing, and also the Kiwi dollar, we got short on that. That was a pretty good short last night. And then the euro, the Aussie, see the dollar is getting crushed. Dollar in the front, and the ones with dollar in the back, they're all the back, right? Why? The dollar is strong. So the euro is weak. The euro is called the anti-dollar, right? Anyway, this is one of the most important parts here. The economic calendar is found on this front page. And we're going to go to next week, which is that's not right, the 20th, right? No. Back it up a little bit. Okay, I'm just going to scroll down. There we go. Monday, that's May 18th, we're looking at the Japanese GDP growth rate quarter on quarter. Supposed to drop from 0.3 to 0.1. Then we have Australian data. I love trading Australian data. And if you sign up for our challenge, our $50 to $15,000 challenge, you get to trade with me during the Asia session with one of my favorite currencies, currency pairs, and the announcements with the Westpac Consumer Confidence Exchange supposed to actually rise from negative 12.5 to negative 1.1%. And then the RBA meeting minutes, that's telling us why the RBA raised rates. That's going to come out as well. So major data coming out. Confidence is very important. Confidence, if people have confidence, it tells us where the economy is going, because people's attitudes will change, right? And people's attitudes change how they spend money, right? How money moves. So that's why consumer confidence is important, right? GDP growth rate is also very important as well. You got to figure that with Japan spending $35 billion a shot on buying back their currency, it's going to slow down their growth rate. Tuesday, we have some UK data. We had UK data today as well. Employment rate supposed to drop, or actually unemployment rate supposed to rise from 4.9% to 5.1%. Employment count supposed to increase from 26.8 to 32,000. And then we have lots of Canada data during the 8:30 news cycle for North America. We have core inflation rate. Core inflation is supposed to rise from 0.2 to 0.3, probably due to oil in Iran, right? The Iran war. Inflation rate year on year is supposed to rise from 2.4 to 3%. CPI trim mean year on year is supposed to rise from 2.2 to 2.5. The CPI median year on year is supposed to rise from 2.3 to 2.6. The core inflation rate year on year is supposed to rise from 2.5 to 2.7%. And the inflation rate month on month is supposed to actually drop from 0.9% to 0.5%, right? Wednesday, May 20th, we have more inflation data coming out of the UK, and it's going to drop from drop 0.4% to 0.3%. Core inflation rate, there's a drop from 3.1% to 2%, and inflation rate month on month. The month on month is going to be more variable. It's supposed to drop from 0.7 to 0.5%, right? And the inflation rate year on year is supposed to drop from 3.3 to 2.6%. And that's going to impact the pound. So we're going to look at the pound. The pound was totally in motion, dropping severely on the data that came out, and pretty good moves. Pretty good moves there, right? Okay. Then we're going to the FOMC minutes telling us why we kept interest rates unchanged. That's going to be released at 2 p.m. And then we're going to have balance of trade, Japan, and balance of trade shifting quite a bit from 667 billion to negative 150 billion. With the increased tariffs, and the trade deficit with the United States has been severely cut, which is good for the U.S., probably not so good for Japan. Aussie, we have some more data, lots of data out of Australia again. Full-time employment change supposed to drop from 52.5 thousand to 40,000. Employment change dropped from 17.9 to 10,000. Participation rate remains unchanged at 66.8%. Unemployment rate unchanged at 4.3%. And part-time employment change supposed to go from negative 34.6 rising to negative 30,000, right? Australia has a really strong economy. So when the war comes out, they'll be the first currency to really take off. Thursday, we have some French data, manufacturing / PMI, nearly unchanged. And then services PMI is supposed to remain flat as well. German global manufacturing PMI goes 51.4 to 51.6. Then we have global services PMI 46.9 to 46.2. And then you have some more UK data on Thursday. S&P manufacturing PMI flash for the UK 53.7, a dramatic drop to 51.2. And then we have the services drop from 52.7 to 51.7. Finally, we get some US data on Thursday, May 21st. We're going to get the S&P, housing starts Housing starts supposed to drop from 1.50 to 1.45. Jobless claims supposed to drop from 211 to 210. Manufacturing PMI 54.5 dropped to 53. Services PMI a rise from 51 to 51.1. Global composite PMI a drop from 51.7 to 51.5. And then inflation rate year on year in Japan a rise from 1.5% to 1.8%. Again, the fuel costs in Japan probably going crazy with such a weak currency. Retail sales ex year on year, retail sales ex fuel actually drops from 1.7 to 1.2%. And then we have consumer confidence in Germany. That's supposed to rise from negative 33.3 to negative 34. Actually drop, sorry. And GDP growth rate year on year, Germany, we have a drop from 0.4 to 0.3. Growth rate rise from 0.2 to 0.3. Retail sales, very important. In the UK, unchanged. Retail sales year on year dropped from 1.7 to 1.2%. And retail sales month on month, a drop from 0.7 to 0.3 as fuel costs start biting into people's ability to buy stuff. We have the business climate in Germany. It's supposed to drop from 84.4 to 82. And retail sales, ex autos, month on month in Canada dropped from 0.5 to 0.2. And retail sales in Canada, 0.5, no previous number given. I don't know why they have a forecast, not previous number. And retail sales year on year is supposed to drop dramatically from 3.8 to 1.5%. When you see such a dramatic drop, that could be a good place to get maybe short the Canadian dollar. Then Michigan consumer sentiment drops from 49.8 to 48.2. Okay, so that's the news. The fundamentals. All right, let's go with the technicals. Technicals we're going to do a little bit differently. We're going to use one of the tools we use during our challenge. And it's called the Trend Navigator. Trend Navigator is, and we're basically going to look at the currencies this way, right? So basically, we're going to look at the major dial there. We'll get us over. We have a bullish bias on the euro, and you know, and we have let me change it to we're going to look at day trading, a day trading aspect there. So I'm not going to go through all the charts and all the time frames. What I did is we developed an indicator. We're basically telling us the direction of the market, the strength of the market, right, on a weighted basis, right? And so we're just going to look at the master navigator there, right? So let me go ahead and get that queued up, and then it's actually bullish 6 of 9 dials with confluence. However, we have a 58% confidence of this going higher. But hey, it's a bullish move. Let's go on right down to the pound dollar. Pound dollar negative, and it is strong downtrend. Hour, 15-minute, 5-minute. Strong sell at 84% confluence. We're bearish the pound dollar. We are bearish the pound dollar. Let's go ahead and go to the dollar yen. Dollar yen, a bearish 5 of 9 dials, right? So have a confidence rating about 43% bearish on this. So we're bearish dollar yen. And let's go ahead and go right to the dollar Swiss. Dollar Swiss is bearish as well. And we're going to go right to the Aussie dollar. Aussie dollar is, like I said, one of my favorite currencies, and it is coming back strong, bullish bias across 9 time frames. So bullish. All right. And let's go ahead and keep moving right along. Let's go dollar CAD. Dollar CAD. That says it's bearish. Okay. We have a bearish conviction there, right? And Nemo, our analyst, he's confident on 46% on that on the sell, right? And let's go ahead and move on to Kiwi dollar. Kiwi dollar has been, was bearish for a bit. You can see the 30-minute time frame it was, and then the other time frames, and we have about 46% confluence. Not tremendously bullish. I mean, if you look at the higher time frames, like the daily, actually we got bearish on the daily and the 4 hours bullish. Got a mixed picture there, big mixed picture there. So we're actually going to go. Okay, we'll give it a couple of bulls or a couple of bears. Let's go. Skip all these. And let's look at pound yen. Pound yen turned bearish real quick. A very strong bearish configuration. 99% confidence, right? You might want to take a quick gander at that for a sell right now, actually. Bearish pound yen. And then we're going to go on to keep rolling. We did the Aussie and Kiwi. These are cross rates, right? So we're going to go to gold. Gold, we got the bearish move there. And what's going on there? That's not the live price, right? Right. And 46%. So we're bearish gold. Yeah, bearish gold. We try to take that long. It whipsaw this as well. It went the route of pound yen and silver. Silver actually got a bullish bias on silver, and let's go ahead. We have to fix that. All right, let's keep it going here, and let's go to our indices. Dow Jones 30. Yeah, a bear. Oh, there we go. Bullish. I'm like going, what's going on there, right? It's switching off, right? And the sell is 38.22%. I'm actually going to overrule that for it says neutral, and I'm going to put a bullish bias on that. Yeah, and then let's go ahead and move to the move down the Nasdaq 100, and Nasdaq 100, and let's take a quick gander because I traded last night, so I really didn't take a look at the overnight market, and the market is like going. That is this. Oh yeah, let's look here. Well, and there we go. And everything's up, right? Right. We're up right now. So, and I think. And we're going to be up for the indices. I'm just going to give us a straight out bullish move there, right? And we're probably got some bugs here, right? We have a 28% sell. It's probably, if you look at a higher time frame, let's go to the higher time frame there, and our highest time frame, our monthly and weekly. Okay. I don't know, maybe something is brewing here, right? After they, over the weekend, we are, this is saying bearish, right? Might be something setting up. I don't know. These AI predictive. Sometimes AI, AI can sometimes do some crazy answers too, right? But this is AI, and so let's go ahead and we went to Nasdaq 100 US, and this is the S&P 500. The S&P 500, oh, it just switched as well, bearish as well. 70%, 31%. It's wow, it's really flipping around here. Oh, so it's not scalper. That's right. This is switching to day trader, right? Right, day trader, swing trader. Yeah, it still says bearish. Okay, so we're bearish. All right. Okay, well that's now join. I want to add, with that, we'll go ahead and turn you to we have a school community here, Elite Traders University, Pip and Run trading floor, and then again we have our one of our $50,000 to $15,000 challenge. The May challenge is closed. We are going to open up for June, so you want to get on the waiting list for June. Go ahead and message me, and I'll give you a link to that. And so what we do is we have a spreadsheet. Our spreadsheet, our compound spreadsheet. There we go. Right. So we take $50, and then basically making 20 pips a day, right? unless we have a losing day. If we have a losing day, then we back up a day, right? But and this is just part of it. The other path is farther down, right? Right. We take this all the way down to 11,000 to 14,242, 15,000 on the 31st day, right? And so this is what we have in our challenge, right? So 15 to 15K, and then so we are working on that, right? If you want to be part of that challenge and use some of these great AI tools and have access to the spreadsheet and our community, we have a good community here on Teams, where we actually post our trades, and we have our whole a whole community of people here who are moving down our spreadsheet. We have a couple of spreadsheets. We have actually a 5 pip one for taking $20 to I don't want that, from $20 to $6,500, making just 5 pips, right? So we have a number of challenges going on within our challenge, which you have the option to have access. We have a 10 pip challenge, we have a 5 pip challenge, and we have a 20 pip challenge, right? And we onboard a lot of great tools. So if you are interested in joining, you go ahead and message me, put in the comments in the YouTube, and we get you signed up for June. Okay. With that said, hey, it's been great having coffee, having my cappuccino with you guys. I hope this was helpful to you, and share it, tell a friend, like, subscribe, thumbs up, and let people know what we're doing. And I wish you all the best. God bless you guys. I wish you all the best in your trading. Come over to our school community and reach out and say hi. All right. Talk to you later. Peace and pips. Bye.